Okay, this is a special edition of the Anderson Report on Sunday, August 9th. We had a very active market week last week. We talked about a lot of that on Friday. We're going to do a little bit more detail on what the financial markets did last week. And it's a great time to do it because the week started with the first day of the month. So the performance numbers that we're looking at are both for last week and month to date. We're coming into the second week of August. After next week, we will be halfway through the third quarter. And as you'll see in a couple of minutes, the third quarter numbers are starting out very strong, probably not as strong as what we saw in the second quarter, obviously coming off those extremely low levels uh, from the end of March. But it will be difficult for the markets to maintain the percentage gains that they have so far for this quarter through uh, the remainder of the third quarter. So let's take a look. The the markets were up almost every day last week. A late rally on Friday brought most of the averages into positive territory, other than the Nasdaq, which did have a very very strong week, on especially on top of what it did in July. So last week the Nasdaq and the S&P each gained 2.5%. That includes the Nasdaq giving up about 1% on Friday. Obviously, a little over a week ago, we had these big four stocks report earnings: uh, Google, Facebook, Amazon, Apple. Big rally on that Friday, a big continuation rally the beginning of this week. They had just gone a little bit too far, too fast. They gave up a percent on Friday. That's okay. The NASDAQ, with its 2.5% gain last week, on top of gaining 6.8% in July, is up well over 9% quarter to date. The S&P 500 is right at about 8 plus 8% quarter to date. Now, the Dow Jones Industrials had a much better week last week than the Nasdaq and the S&P. It was up 3.8%. But you have to consider that in July, the Dow gained less than half what the S&P and the Nasdaq did. So it's making up for a little bit of its underperformance from July. The Dow gained 2.4% in July. It gained 3.8% last week. That means it's up a little over 6% for quarter to date. That compares with the S&P being up 8% and the Nasdaq being over 9%. Now the Russell 2000 had the best performance of all indices last week. That would be the small cap average, and it gained 6%. That's on top of gaining 2.7% in July. Again, kind of with the Dow trailing the S&P and the Nasdaq. So the Russell is up almost 9% quarter to date, still down on the year, after some just horrific performance during the coronavirus sell off from late February into the end of March. So um, that's pretty much what we saw last week. We also finished the week with the VIX at a very low level. 22, just over 22. The VIX had not closed below 24 and a half for this whole recovery stretch we've had after the sell off began in February. The last 2 or 3 days with these late day rallies we've had, the last 2 or 3 days of last week, the VIX has just been beaten hard at the end of the day, and it closed just above the 22 level last week. Um, Really, there's going to be some people talking about how we're overdue for a sell-off. Where I'm sure that the put call numbers are very um, bearish, being that there's probably very little put buying for call buying. Um, and we had, um, basically a very positive week all the way around, maybe with the big momentum mega cap tech names being a little bit overbought. One other average that we have not mentioned a lot that had a very good week last week was the Dow Jones Transportation Average. Almost always thought to be a early cyclical indicator. The transport average was pummeled during the sell-off because of the high percentage of airline stocks that are in the transportation average. Those airline stocks started to pick up last week. The railroad stocks started to pick up a couple of weeks earlier. And you also have um, UPS and Federal Express in the transportation average. UPS had a very good week. They had earnings last week. They announced some surcharges for the holiday season toward the end of the week. Pricing power is always a very positive sign that people look for in certain industries and in certain companies that are leading indicators in their industry. UPS was up another $10 on Friday. That was on top of the gains that it had earlier in the week after their earnings report. The transport average was up 5.8% on the week. It traded the first time it's traded above what were its June highs, right around the 10,000 level. It went out at 10,576. The all-time high is still, I would say, 10 to 15% higher. But we'll just have to see if we see bookings increase on the airlines, and we see maybe some more positive data on the surge from coronavirus outbreaks that we started to see about a month ago start to recede after some indications that may be happening middle of the week last week. So, just to look at a couple of other sectors of the market that acted well last week, we're going to first look at the S&P Industrials. Now, this is one of the, not to be confused with the Dow Jones Industrials, this is one of the 11 sectors of the S&P 500. The S&P 500 Industrials gained a little over 4.7% last week. They were the best acting sector within the S&P universe. They were followed by the S&P Financials and Energy. Financials gained 5.25%. Energy gained 3%. Both of those sectors have been fairly volatile over the last 4 to 6 weeks. There'll be a leading advancing sector one week. There'll be a leading declining sector the next week. I would watch both the industrials, and I would watch both the financials and the energy sector next week to see if there's any follow through. I saw a number of positive comments over the weekend on regional banks. I have not really looked at regional bank ETFs yet, but I just think that the banking sector hasn't really been in a leadership position in the market overall for a very long time. And if the financials were to even out their rally a little bit more and show some leadership over the next remainder of this month, especially if we get any more profit taking in big mega cap tech names, that could be a very positive sign uh, for the market as we get further into the third quarter. A couple of other sectors just worth mentioning. Uh, Telecom services up 3%, information technology up 3%. Actually, both of them just a touch under 3%. Both of those are your internet traffic trade. I would say that almost all the gains in those sectors came during the first 4 days of the week, as the Nasdaq was down on Friday. I think, and again, I do work for a broker dealer. None of this is investment advice, but and I cannot talk about individual stocks, but I think that it's very likely to see some more profit taking in the mega cap tech sector. That's that the stocks that have been leading this big push in the internet traffic trade. We had a very explosive move after earnings a week and a half ago, and late the week before last. We had a very strong last day of the month of July. August began very well. These stocks are ripe for some profit taking. They're up over 9% quarter to date. That's just over the last 5.5 weeks. It's a move. They can continue to go higher, but they can't go up 9.5% every 5 weeks. Okay, so couple of one other sector maybe to mention: S&P 500 materials. We've mentioned it numerous times. It was up 2%. Certainly a respectable week for the material stocks. They are viewed also potentially as early cyclical names. It's very hard to imagine that the economy is going to run out of steam and have a dip that approaches anything like what we saw during March and April, when we have what are almost always considered to be cyclical sectors: the transportation sector, the materials sector, and the industrials acting well. Okay. Now, the market has had a V shaped recovery. What we really need to see is some of this economic data to follow through so that the economy can match the V shaped recovery that the market has had. We had a reasonably encouraging employment report on Friday. We will get more data on that next week, and it will just be critical to have some for the economy to continue to show some momentum in the growth side, to get bigger pockets of the economy back to work, to get the schools open in the fall. And we got some positive chatter on that late last week, and maybe also even on Saturday. And and that will help tremendously with the employment picture, which we'll get a little bit more data on that next week. And and although we won't get the data next week will be the survey week for what will become the August employment report that we will get the first Friday of September. Now, a couple of other things to go over. There were a couple of there was one Noteworthy IPO on Friday. Rocket Mortgage got some headlines, trading up significantly from its IPO price of 18. I would just caution people that, and again, this is not investment advice, but what was missed in some of the headlines about Rocket Mortgage trading up from its IPO price is that this stock came at $18, which only a week earlier had been projected to maybe come in the range of $22. And the amount of shares that they sold was reduced from an earlier uh, uh, prospectus, red herring, what they call it, where they were going to sell 150 million shares. They only sold 100 million shares. So not only did they reduce the price by about 20% from 22 to 18, they sold only 2/3 of what they ideally wanted to sell. So I would say that the stock trading up a little bit on Friday from its IPO price. You have to put that into perspective. I think from the issuer's perspective and the banker's perspective, this was a little bit disappointing investor reaction to the IPO. Even though it traded up a little bit, they priced it much lower than they were anticipating, and they sold a lot fewer shares than what they originally wanted to. Okay, so we have one question here from Rick. When will the sector of rails and land assets be considered relative to their intrinsic value? I don't really think they're going to view them on the intrinsic value of their land asset prices. I just think that what they're going to be looking at is um, traffic on the rails showing activity at the ports from trade from the Far East and or anywhere else, and also potential grain and agricultural shipments going from the middle of the country to the ports, most likely to China, uh, if they continue through with their projected purchases on phase one of the trade deal. I just don't think right now that I'm not an analyst. I can't get into specifics of it, but I just don't know that you're going to see um, rails starting to be valued on what their land assets or right of ways are worth. Um, One other thing I would mention, um, gold, of course, a tremendous amount of interest in it over the last few weeks. Hey, Neil, trading above 2,000 for the first time ever. I looked about 45 minutes ago. Although gold was down a little bit on Friday, down 1.5%. Silver had backed off from just a very sharp rally for most of the week again. Had been up above 28, backed off to maybe 26 and a half. Seems to be more volatile on a day-to-day basis than gold. 45 minutes ago or so, I saw gold back up around maybe up 1.5%, up around the 2065 level. Silver back up above 28. We'll see if those price moves in gold hold into the Monday session, et cetera, et cetera. Now, I think it's also worth talking about. We did have a press conference from President Trump Saturday, late afternoon, early evening, where he basically signed 4 executive orders to basically do a lot of what they were trying to do with Congress, although they'd gotten very little movement from the Democrats in their negotiation on a stimulus 4.0 type deal. I just want to explain to people a little bit how this works with these executive orders and what exactly he did. Clearly, they were a long ways apart, and even though the Senate was not going to go on vacation until some agreement was reached. I don't know that the House was going to play it the same way. I think they were going to leave some of their committee people in to negotiate, but basically, Trump just took it into his own, took responsibility for it himself by his first executive order was to um, say that they were going to do a $400, what had been the $600 federal unemployment kicker per week is now going to be a $400 kicker per week, which the states will pay $100 of or 25% of. Now, I don't know if he's had conversations with certain state governors and they've agreed to it. I don't know what happens if the states decide not to pay $100 extra on top of what their typical unemployment insurance is. I don't know if that means then individuals will only get an extra $300. I just think that this is his way of putting some of the onerous on the states to help out people that are at the lower, at the, I believe it's a annual income of $75,000 or less. They will be getting an extra $400 down from $600. Now, there are going to be people on both sides of the aisle that don't like this. You are going to have people saying, well, it's going to be troublesome for businesses to hire people, which we had heard a lot about, that with the extra $600 was making it a lot, very difficult for a lot of businesses to call some of their workers back because there were workers that were getting less for staying home rather than going back to work. I'm sure there's some calculation in here that where the administration's initial proposal was for 200, this kind of tells us that they were willing to go to 400 on this. And um, the way that the reason that Trump is able to make this effective is that even though this is not going to be a new bill passed by Congress, the money is coming from pools of money from the 3.0 Stimulus Act that has not been spent yet. Clearly, they can only spend money that's been appropriated. There's allegedly 45 billion, give or take, that has still not been doled out from the money that was appropriated from the CARES 3.0 stimulus plan. And that's where this extra unemployment kicker is coming from, of the $400 extra per week for people rather than the $200 that the administration was going with as trying to negotiate with Congress. And I would think that also they're willing to up that ante a little bit because they have the dough that was appropriated with CARES 3.0 stimulus that was not doled out yet. And because of the recent outbreak of coronavirus cases in a lot of high population areas that we saw in June and July, although we think now that's probably peaked, that a lot of businesses were not able to reopen, some of which that did reopen had to scale back a little bit, and some states have scaled back their capacity guidelines for any indoor activities, amusement parks, Disney, etc., maybe lowering their hours a little bit, not nearly at the level they thought they might be at right now. And I just think they feel that they want to make sure they don't lose any traction in having people being able to pay their bills, buy groceries, etc., etc., etc. So clearly, there will be people, hard deficit hawks on the right, that will, and just very, very, very pro business chamber of commerce people that will say this is the wrong thing to do. We need to get these people back to work. I think the administration is saying, look, it's a lower amount. If you really want to get them back to work, maybe you're going to have to pay them a little bit extra so that they're saying to themselves, well, this is $800 less a month than it was before. Maybe I'm not going to get the money from the state. Maybe it's only going to be 300 a week, not 400. All right, I'll go back to work because I'll be making more than if I just sit home. Okay, so and that money, that that money can be done without a bill because it's coming from funds that was already appropriated that just hasn't been doled out yet. So it's not like the administration uh, spending money that hasn't been passed by Congress. So the other thing he signed was a deferral of the employment portion of the payroll tax from August 1st through the end of the year. Uh, this means that the Social Security tax or FICA tax, it might say on your pay stub, that you about 7.5% is paid by your employer. You pay about 7%. That's what's deducted out of your uh, check every 2 weeks or every month, depending on when you get your check. And for people making $75,000, or it's either 75,000 or 100,000, I can't remember what threshold they mentioned. That they are going to delay paying that through the end of the year. So, will you have to pay it later? Yes, you'll probably have to pay it later. But I think, and even though this will be maybe an extra 25 to 40 bucks uh, in your check, maybe a little bit more depending on what income level you're at. Could be maybe up to as high as 75 or 80. I read a couple of places. That's extra money in people's pockets to be able to, account for some of their grocery bills, some of the utilities. Clearly, in and of itself, it's not going to be enough for people just to pay their rent. But he has also extended the moratorium on evictions through the end of the year so that people can't be thrown out on the street if they're having trouble paying their rent. I think that the landlords and rental agencies are just going to have to suck it up on that. And clearly, he doesn't want to see a situation where, through no fault of their own, people have lost their jobs. Congress has refused to negotiate reasonably on stimulus 4.0, and people get evicted from their apartments. So that moratorium is extended through the end of the year. The fourth executive order was a deferral of student loan payments and interest on student loans through the end of the year. Again, just to give people a little bit of a break on expenses that they have, in case they are in an environment where with their unemployment, they're not getting as much income as they were if they were working. So, 4 executive orders, a $400 unemployment kicker per week, 25% of which is to be paid by the states. We'll see exactly how that works out. A deferral on the employment portion of the FICA or payroll tax from August 1 through the end of the year. A deferral on the student loan payments and interest on student loans through the end of the year. I am not sure if that covers all private student loans in addition to federal student loans. And a moratorium on evictions for rentals through the end of the year. So I think that this will put the Democrats in a very uncomfortable position if they decide to take him to court saying that any of these executive orders are illegal. Uh, Clearly, the DACA executive orders by President Obama a number of years ago were all said to be illegal by numerous courts and so forth, but they were never rescinded. And from a couple of reports, there's already been outreach from House leaders and or Senate leaders, at least from Schumer, the minority leader in the Senate, to the administration that we want to get back to the negotiating table next week. Um, if the Democrats were to take him to court, clearly the headlines that the Republicans would go with were, we're doing everything we can to make sure people have uh, have cash flow in their personal life, since the Democrats were not really moving off their negotiating stance for stimulus 4.0, and the Democrats want to prevent us from giving you this assistance. So I don't think that you're going to see uh, court action on this from the Democrats. I think they'll probably go back to the negotiating table and see if they can get a broader package than this. Clearly, this will, none of these executive orders include $1,000 or $1,200 checks, or twice that for married couples, maybe even more than that for families of four, like what we saw in back in April. That would take that would only happen if you get a real stimulus 4.0 bill passed through the House and the Senate and signed off on by the president. Okay, so that's kind of what, that's, to the best of what I have seen, that's where we stand on what uh, Trump signed in terms of executive orders Saturday night and what it means. Will the markets like it? I think the markets will have an okay reaction to it. I think that, other than the fact that the markets have had a very strong move over the last 5.5 weeks, typically they would like this. And if we do get some profit taking next week, it might be a little bit less than what we would have gotten if there had just been nothing, a stalemate with long summer recesses pending and a total goose egg in terms of stimulus 4.0. So, um, in terms of next week, we'll have kind of the tail end of earnings season. There still will be some significant earnings reports, and mainly from second tier companies, but we'll cover the ones that we think are impactful when they happen. Now on Monday, we're going to get what they call a JOLTS job openings reports. That's been running at about that ran at about 5 million or so last month, a little over 5 million. And you might say, well, how can we have job openings reports if we still have an unemployment rate of 10%? And even in January and February, when we were running at ridiculously low levels of unemployment, 3.5%, with big, big, big job gains every month, we would still see JOLTS job openings. And basically, it's a skills mismatch and or a geographical mismatch. You will see probably job openings of somewhere in the 5 to 5.5 million range. And it's all about a skills mismatch and or a geographical mismatch. If there are any real striking categories that show big ads, we'll talk about that probably tomorrow. Tuesday we'll have National Federation Business Small Business Optimism report. It'd be very interesting to see what the small business community says, given the fact that some of the reopening plans have been stalled, some of them have been cut back a little bit, as we saw uh, uh, outbreaks of the virus in very high population areas, South Florida, uh, parts of Texas, Arizona, primarily the Phoenix area, and parts of California. We'll just see what the small business community has to say about it. It seems like maybe the virus outbreaks peaked last week. Hospitalization capacities came down a little bit in the hottest areas. Uh, we got to see if we get more progress on that next week. Hopefully, we will. We get PPI on Tuesday. It hasn't been a very impactful number yesterday. We don't want that number to go negative. We don't like deflation. That's a producer price index. We'll get consumer price index on Wednesday. We certainly don't want to see a spike in inflation, but we don't want to see negative numbers there either. We might see a little bit of a jump in food prices. Certainly not in gasoline. Gasoline has been down from where it was in at the beginning of the summer. Thursday, of course, we'll get weekly claims. Weekly claims was a little bit of a positive surprise last Thursday when we went from down 1.4 million first time claims to about 1.2 million. And we had continuing claims fall from 17 million to 16 million. We want to see that continuing claims number take a big plunge well below 15 million, get it down to about 12 or 14 million, hopefully by the end of July, by the end of August, going into the fall, especially if the schools reopen. And we did have this statement by Governor Cuomo of New York on Friday that the schools can reopen in the fall. And we even had comments from Chuck Schumer that he's positive on the schools reopening in the fall. Look, I think you'll probably see similar comments from the governor of Connecticut, Lamont, and I think you'll see similar comments from Governor Murphy in New Jersey. Their pattern they've been following Cuomo's lead, and if we get more comments that schools will reopen in the fall, that will help significantly with not just the employment picture, but I think the confidence overall, consumer confidence, business confidence, et cetera, et cetera, et cetera. You've got to get the schools reopened. You've got to get people not being hindered to go back to work because the schools are not reopening. So I know that California is saying, schools are not going to reopen at all this calendar year, and they don't even want the private schools to reopen. I think their mandate on the private schools is going to be challenged in court, and the private schools will probably win that, but we'll see. And then, of course, on Friday will be a big day. We'll get into it a little bit more detail as the week works on. We get retail sales. That'll be a very important number. We had big jumps in May and June. We're going to get a quarterly productivity report. That's a big number every quarter. That's one of the things that really help drive GDP up to 3%. And we're going to get industrial production, capacity utilization, and the University of Michigan consumer sentiment numbers. All of that on Friday. Yeah, Maddie, I know that teachers are not really on the unemployment, but I just think that with schools reopening, that one of the fears has been that if schools don't reopen, and you've got families that have two working parents, that both working parents will not be able to go back to work if schools don't reopen, because one of them will probably have to stay home, as if the kids are going to be home, unless they're in a position where they have full time care. And most people at the moderate to lower end of the income spectrum probably don't. So the fear has been that if schools do not reopen in large scale across the country, that you'll have a lot of situations in high population areas where if you've got two working parents, or maybe if you've got a single mother or a single father with kids, they may not be able to go back to work, or they may have to only be able to work from home if their kids aren't allowed to go back to school physically. So um, I know that some areas may be doing virtual school for a couple of weeks. They want to get confident that the outbreak is of the virus cases is under control. Certainly, in some high population areas in South Florida, maybe even in the Houston area, possibly in Phoenix area, and in California. I know that there's some other areas where you've had some outbreaks, but those are the areas I think people have been most concerned about. So if we get uh, a lot of the states, particularly in the Northeast, we want to see Governor Lamont in Connecticut, Murphy in New Jersey, and this wacko Wolf in Pennsylvania make specific statements over the next week that schools are going to reopen in the fall. And that will give people a lot better confidence on the employment picture, on the economy picture, and just about a big step toward feeling that the virus is under control and getting back to where we can have normal life activities, not to the extent that we had before the virus happened, but a big step toward that direction. Okay, so I don't have a whole lot else right now. I just wanted to do a weekly recap of what markets did last week, what to maybe look at this week. I think this will be an important week for the markets, even though it's the second week of August. I have this feeling that the summer doldrums have been canceled this year. I think you're going to have a lot of politically charged headlines. You've got a lot of speculation over who Biden's going to pick as his running mate. You've got the Democratic National Convention starting next weekend and running through the following week. You've got still some earnings reports that are going to be coming in. And although we've got mainly positive news right now, the market's has had a big move, with the S&P up 8%, the NASDAQ up a little over 9%. Quarter to date, only really 5.5 weeks into the quarter, it's probably a rate of percentage gains that cannot be repeated all the way through the quarter. But we'll just see if it'll be interesting to see if we get 2 or 3 days of weakness in the market, how investors react to that. So it's late on a Sunday night. I'm pretty much done. I hope everyone has a very good start to the week. This is the Anderson Report. This is my YouTube channel. If you have not subscribed yet, please subscribe by hitting that red bar. Hit the little bell next to it. You'll get notifications on when the next broadcast is going to be. I am also on Periscope at TJ Anderson 12. And you can watch my Twitter handle. It is TJ Anderson1. Thank you, everyone, for your support. And we will talk to you most likely tomorrow at 7 o'clock.